is here with us, and he actually battles with issues such as this actually when running his money and portfolios. Pankaj, if I see your top names in both the strategies which you're running as pharma names, should I read it as sign of a conservative approach, or should I, are you genuinely seeing that the companies representing in your portfolio, the worst for pharma is over? What's your thought process behind it?
Hi, Ajay. As investors, Ajay, we have never been conservative. We are essentially growth biased investors, and we're always looking for quality growth, and we're chasing growth. Essentially, I think healthcare is a sector, meaning we've been pretty positive on the sector for over a year. And clearly, during the course of this pandemic, sector has done exceedingly well. But I think it's on. This is just the beginning of probably what would be probably a long cycle where the sector should do well. Because some of the headwinds that the sector was facing over the last 2 or 3 years are clearly behind us. And from here on, the sector is poised for a significant growth. Within the sector, we are very constructive on, and I've said this earlier, on the CRAM space, because I think that's a sector or a segment where India has certain very strong competitive advantage, and there is significant, long horizon tide or a long structural trend favoring India in terms of the strategic advantage India possesses in terms of the skill sets and the low cost service that India can provide to the world. So we think that's a sector which will continue to do well and probably deliver growth over the next 10 years. So net overall, we remain very constructive on pharma.
Right. There's also some very interesting consumer names in your portfolios. I want to understand from you a category which has recently started manufacturing a lot of hand sanitizers, but essentially a category, the liquor category, right? It took a bad hit for the first 3-4 months, and then because of the sheer revenue loss to the government and pressure, they opened up this category across the country despite a lockdown in a measured fashion, and now being a Friday, whatever you may call it. But how are you looking at this spirits as a category or premium liquor as a category? What kind of consumption pattern do you see if one were to take a 2-3 year far out, and hence how would the leader likely to behave?
Sure. So you're right, Ajay. Like every other discretionary category, this category has been hit very badly because of the lockdown. But I think the drivers of the business and the industry remain very compelling over the medium term to long term, because in India, as we are at this point of time, we are in a situation where demographics are extremely favorable and per capita income will keep rising. Globally, we know as some of these things play out, people do spend money on discretionary categories, which include leisure, travel, hospitality, and consumption. And within the consumption, I think spirits clearly stand out because in India, penetration levels are extremely low. And as per capita income rises, people want to migrate to higher quality spirits. So we think given the low penetration levels and the macro drivers, the category is indeed a category and a business which will deliver secular growth for the next 15-20 years. And this is what has happened in a lot of other economies globally as well. While these businesses have been impacted in the short term, especially in the April-June quarter because of the complete lockdown, but I think gradually stores are opening up and state governments are giving permissions. Because also at the end of the day, this industry is a significant contributor to the exchequer at the state government level, and they would not want to lose revenues. So I think near term, this business are badly impacted. Probably this is an outlier year, but once you look beyond this and once lives are and livelihoods are normalized, people will go out and spend, and I think they should do well. And clearly, it's a category, where if you look at the leaders, they clearly dominate, have a very dominating market share. So I think the leaders in the industry will keep growing stronger and stronger. So from a slightly more medium-term perspective, our outlook on the category remains very constructive.
Actually, I would also want your thoughts, Pankaj, on Atmanirbhar mission the government is undertaking, and under which a lot of Indian PSUs are actually going ahead and forging big kind of joint ventures with global companies. One such company, BHEL, has partly got re-rated, and now we understand a German tie-up is round the corner with a big manufacturing facility in UP. Let's get in my colleague Awan to speak about it, and then I would like to understand from you the overall theme, which is creating a lot of excitement in other stocks like Bharat Dynamics, HCL, Mishra Dhatu, so many others. But as a theme, I'd like your opinion. Awan, tell us, what are you gathering on BHEL?
Well, BHEL is sure up and away in today's trading session. That's largely on the back of the fact that the company is going to collaborate with Rheinmetall. This is for their entry into the Indian defense market. Now, this is a over 130-year-old German defense manufacturer, and we understand that Rheinmetall is in talks with BHEL as well as the UP government. This is to invest in their Uttar Pradesh defense corridor. Now, remember, BHEL does have a few facilities in UP, including Kanpur and Jhansi, and these come under UP's defense corridor. Now, Rheinmetall is as of now just in initial talks. They will be returning to have more concrete talks to talk a little bit more about what exactly their timeline is, the overall proposal that they have with BHEL. The first project we understand that is being targeted is the Sky Shield air defense gun, which is supposed to be one of the best. Do remember, it was a few months ago that BHEL had initiated this process, inviting expressions of interest from foreign companies in order to leverage its facilities.
Yes, Pankaj, what are your thoughts on this entire theme and the way a clutch of 8-10 stocks are getting re-rated here?
I firmly believe, Ajay, that it's only during the course of a crisis that you sow the seeds of significant structural reforms. And if at all, one positive thing I think that can emerge out of this crisis, probably which all of us would look back probably a year down the line when once life is normalized, is probably this whole emphasis on Make in India. I think the government has been talking about this Make in India for the almost last 5 years, but unfortunately we had not seen any meaningful move in that direction. But I think given the changing geopolitical dynamics and the sense of urgency induced by this pandemic and the crisis, I think it's really forced government of India, and also and that's a trend probably globally where we are moving towards a world which is getting more deglobalized. And probably global manufacturers are looking for a second base to China, given trade issues that China has with some of the largest economies in the world. I think it's very strategic, and I think it's a great opportunity for India because India is the largest supplier of manpower to the world. We have 10 million people joining our working age population every year, and that will continue for the next 20 years. Manufacturing is the only sector which can create jobs on such large scale. And at the same time, probably India now has the lowest wage cost in the world. And not only that, after last year's tax cuts on new manufacturing to 15%, we also have the lowest tax rates on new manufacturing in the world. So I think India offers a very compelling proposition for global companies to manufacture here and to service local markets, and at the same time use India as a base for exports to global markets because of its cost competitiveness. So I feel, indeed, I think I think this is a very big ticket reform. We're already seeing announcements, as you said, in terms of some of these defense announcements. We're already seeing some initiatives on the health API and the pharma side. We're already seeing something happening on the electronic side with the PLI schemes of the government. So I think manufacturing in India probably can become really significant, and probably I think it's a very big reform which probably should become the driver of our growth over the next 5 years.
Right. Okay, so before I let you go, Pankaj, can you help us understand what are your thoughts on the earnings recovery, broad-based earnings recovery actually coming in? How much time, in your view, what kind of conversations are you having with the company in your portfolio? What is your thought, and is there any visibility?
Well, the aggregate picture is extremely heterogeneous, Ajay. There is a very wide disparity. So there is a small section of companies which have been beneficiary of the crisis, or where the business has been relatively immune to this crisis. You look at staples like a Lever or a Dabur, or you look at some of the IT companies who have adopted to this work from home and are delivering projects globally where their employees are sitting in their homes in India, and projects are getting live, without anyone being on site. And likewise, we have seen pharma, which has had very little impact of the crisis. But on the other hand, we have seen significant dislocations across a lot of other businesses. So, when you look at the aggregate picture, I think it's very heterogeneous. The impact of the crisis on different businesses is significantly very varied kind of thing. The aggregate level, I think this year is a complete washout. Probably this year, meaning if you look at it, we're talking about high single-digit contraction in India's growth. Now, this is something that India has not witnessed. The last time we had an absolute contraction in our growth was in 1981. So it's been 40 years. So I think the path to earnings recovery from here on will be slightly more gradual kind of a thing. My view is probably will take about 18 months from here on for earnings to get back to where we were on a pre-COVID level. And having said that, within that, I think there will be lead and lag effect where certain sectors will recover very quickly, where certain sectors like travel and hospitality will be.
Thanks very much for that, Pankaj, joining us on the time.